Welcome to another S&P 500 analysis. Today is July 10, 2021. The market had another wild week last week, and we're going to take a look at it to see if the bear have went back to their cave, or is this just a little trial run last week to test the water? Stay tuned. Now let's start looking at this weekly chart here. As you can see, we saw the S&P 500 finish the week with a hangman type of a candle, and usually when we see that type of candle, we what does conclude that there must be a some sort of a pullback, or the bear have taken the market down for a little while. Then the bull came back and charged it back up and closed where it started. And that's basically what happened. But if you are asleep or you've been hiding and you just came back and then open up the chart or looking at the S&P stat, you would notice that you probably would conclude that there wasn't much happen in the market. Well, to the contrary, when we look at the price action, you will notice there's been some wild move. But if you look at the gain for the week, it's only 17.21%. I mean 17.21 point, or 0.4%. So there's not much happening, right, on the up or down basis. But if you look at the range is actually over 82 points. So the range is pretty wild. I mean, we did see a over 100-point range a couple of weeks ago, and this right here, this candle here, 2 weeks ago it was 112 point, and last week it was 80 point as well. So this week, slightly a little bit more. So right now on a 10-week basis and also the 40-week moving average, both of these moving average are still pointing up, and also the price for the weekly candle is still inside of this wedge here, this rising wedge. And also notice that even though we saw a pullback last week, we did see the low held above the previous week low. So that, kind of keep the one-time framing up price movement going. So all in all, looking at this chart here on this weekly basis, the S&P 500 trend is still up. And just a quick glimpse at the daily chart right here on this daily S&P 500 chart. We're going to go to analyze the daily price action in a little bit more detail later on in this video. But I just want to highlight the move that we saw on Thursday. Right? It came down, and if we take a look at it from the previous week close to the low, on Thursday, we see there was a 1.5% pullback from the previous week close of 66 point. But also, if we just take a look at the previous day close to the low on Thursday, that's 1.66%. So that is quite a shock for the market. In matter of fact, I have a butterfly. I mentioned it at the end of last video. I had mentioned that I have set up a butterfly that is targeting in the 4,300, but my anticipation wasn't for it to come down and hit that 4,300 level in one day. Okay, I was basically playing with next week's put option, setting up on that butterfly targeting 4,300. But all in all, it worked out, and I just took my profit and closed it out as soon as I saw some sort of price, saw some price action that tells me that, this pullback is getting too quick and too fast. So I closed it out, took my profit, and now I'm just waiting for the next move. And as you can see right now, the option market is pricing in pretty close to 60 point, plus or minus 60 point move for next week. So these are the expected move range here, and based on the option market pricing and also the volatility. So these are just sort of kind of guideline, not necessarily it's a prediction of where the price is actually going to move, right? So it's just that's what the option market is pricing in at this time, that it could move up to a level of 44.27 on the upside, and on the downside to 43.11, somewhere around there. Another piece of information for one to kind of see what other market participants are betting on. Now let's take a look at this sentiment chart here. First, looking at the S&P 500 on Friday, S&P 500 closed up a little bit over 1%. and closed at with a gain of 48.73 points. And as you can see, the VIX came back down from Thursday little peak here. On Thursday actually closed at 19, but on Friday it came back down to 16.18. So once again, the market participants are still feeling complacent. They are not very much fearful of any sort of a downside yet. And also looking at the put-call ratio, the put-call ratio did come up slightly on Thursday, and it went up to 0.66, but it's still underneath that's 0.75. And on Friday, it closed at 0.56. So again, market participants are still putting on risk. Now, here's the astonishing move here. If you notice this up-down volume ratio, it is actually 6.54, and that's been quite a while since we've seen this high of a value. And the last time was back here on May 14, where it was 8.49. And this number here represents there's 6.5 times more up volume than down volume. So it's quite strong on Friday's rally here. Right? And also looking at the daily advanced decline, again, you notice that the advanced decline, the advancer led the decliner by a margin of 1,963. That is very strong because you look at it, in the New York Stock Exchange, there are about 3,000 stocks being actively traded each day. So if the advancer led the decliner by almost 2,000, that means there's only 1,000 split among the remainder. Let's say there's half and half, advancing issue, and another half is a declining issue. I mean, there's another 500 of advancer there. So you're talking about 2,500 advancing issue and only 500 declining issue on Friday. It is quite strong. We haven't seen this big of a margin since, once again, back here on May 14. And that day it had 2,203 more advancing issue than declining issue. So based on that, these two internal, the Friday rally is definitely a broad-based rally. But then again, don't forget the Thursday sell-off, right? The Thursday sell-off wasn't anything to sneeze at also, although the down volume, the up-down volume ratio is only 3.5, 3.5 times more down volume than up volume, but that is still substantial. And also the advanced decline, the decliner led the advancer by over 1,000. So, that's like 1,800. So that also was a broad-based sell-off on Thursday. So again, we basically having this tug of war between the bear and the bull. So right now, we basically see which one going to give up and which one going to dominate in the coming days, the coming week, because this tug of war is going to come to an end, and we are just kind of a spectator right now watching this game being played out. And looking at the New York Stock Exchange 52-week high, 52-week low, we saw 141 more new high than new low on Friday. But on Thursday, even though we have that bloodbath pullback, there was also 30 more new 52-week high than new low. Now that'd be a little bit of a different story when we take a look at the NASDAQ. Now, although Friday, the SP 500 had a broad-based rally, but again, it was not enough to resolve this negative divergence between the cumulative advanced decline line and the S&P 500. So you can see S&P 500 closed with a new closing high on Friday, so essentially putting up another higher high. But again, the advanced decline, cumulative advanced decline line failed to put in a higher high. Although here, let's see, on this value here is 24,838, and it is a 25,017. So it got above this this little peak. But what we really need to see is for it to come back up to above 25,937. So we need to see a little bit more improvement on the advanced decline, and maybe we will see that in the coming week. if the market continue to rally and move up higher. Now, once again, also notice that the price action here, it could be setting up something similar to this right here, this price action here, and notice that how it kind of pulled back a little bit and then made a big push up. Then we get a little bit more of a pullback, a little bit more substantial pullback before it continue on this trend up. And looking at the NASDAQ market, the NASDAQ 100 closed up on Friday, a little bit over 103 points or 0.71%. Once again, it also showed a quite strong up-down volume ratio. We saw a 3.5 more up volume, 3.5 times more up volume than down volume on Friday, with a 2,333 more advancing issue than declining issue. So once again, it was a broad market rally on Friday. And comparing the last time that it did that was on May 14, where the up-down volume ratio was 7.8, and the advanced decline, the advancing issue led the decliner by 2,741. So all in all, it was a good day for the market as a whole because there was a broad market participation. And here's the little twist on the NASDAQ. Look at on Thursday, we finally saw a more 52-week low than 52-week high on Thursday. It was actually 75 more 52-week low than 52-week high. And we haven't seen that since back here on May 19. So that's been quite a while that we saw a reversal of the 52-week high and a 52-week low. But then on Friday, it came back and closed the week with 64 more new 52-week high than 52-week low. And here again, similarly to the New York Stock Exchange, even though the NASDAQ had a broad market advance on Friday, it was still unable to overcome the negative divergence between the cumulative AD line and the index itself. So that is still need to be resolved, and we need to continue to watch for the advanced decline on the coming days and coming week if the market continue to move up. So from a reversal of the Thursday decline, Friday showed broader market participation. And the market participant, once again, is maintained to be complacent and also taking on risks. Right now, it appears that the buyer is in control because of the broad market advance on Friday with the up-down volume ratio, and especially with the advanced decline, have such a wide margin between the advancing issue and the declining issue. That could be a sucker's play, that there might be some, you could say it's a dead cat bounce. But once again, I put on a butterfly targeting 4,300 for this coming week, but it hit that target in one day. So that is a quick move down, and I wasn't surprised to see a reversal immediately soon after it hit that, went below that 4,300 in such a short period of time. So right now, I am no longer shorting this market. I am also not long this market. I'm basically just kind of wait and see to see what it's going to do and what is the next message the market going to send out to tell us to be prepared for. But definitely right now, there's this tug of war between the bulls and the bear, and someone going to come out as a victor. So, and it doesn't matter who it is. I'm just waiting to see which one is it. Then I will trade accordingly. So let's go and take a look at the price action of the indexes. Now, looking at this daily chart of the S&P 500, as you can see, when we came back on the 4th of July weekend, we saw the market came down and tried to come down to this 127. Remember, we were talking about this Fibonacci retracement here and extension, and it passed the 141 the previous Friday, and we're basically looking for a pullback back to this 42.57 level, or if it continues to move up then we essentially are looking for this 1618, this 4378. And as you can see on Thursday, it was trying to come back and looking toward the maybe coming down to this 4257. When I see these price action and looking at these tail, people think that, this could be a push up. But again, we're looking at the internals, and that's the reason why I put on the butterfly targeting of 4,300, because on the 4,300, I didn't expect it to come down this quickly, because I was basically looking for a pullback to break this wedge, this trend line, and possibly come back down to this 42.57. And by the time that my butterfly is coming to expiration, it should get close to that 4,300, or at least got a chance of hitting that 4,300 target. Then I will close on my position. But looking at it on Thursday, when it pulled back in a one single swoosh, then hey, one bad thing is that it did not take out too much of a time premium for that butterfly to really work. But also the other thing is it did provide a quick profit. So I'm not complaining, but right now I'm basically is not shorting this S&P 500, to come down at this 42.57 yet, because I'm still waiting for this to settle down. Would it be coming up to this 43.78, this 1618, then pull back down? Because up here, there's only a couple things that the trader or people, the market participant, could be watching for, right? Because it is in a new high territory, and there are no previous, price level for us as a trader to use it as a, resistance level or target level. And one of the tools that most trader, or at least I do, is I use the Fibonacci retracement or the Fibonacci extension. But I'm using the retracement because I'm also looking for this retracement zone to take place. You could see that it came back in to the 618 and 382. This is the retracement zone. And if it bounces off anywhere inside of this zone, then we could project some possible target for the price to hit. And right now, I'm basically looking at this 43.78. And I'm sure there's a lot of traders also looking at that. Then the other thing is this upper trend line of this wedge here. And that is going to bring it up to above 4,400. So that psychological number of 4,400 is also could be in play. So that's why I'm kind of holding off on initiate any kind of short. Although I do see that because of the advanced decline line is still maintaining that negative divergence. Even though we saw a nice move on Friday, the internal on a collective basis is still showing me a little bit of a weakness on that bias. So I'm still being very cautious about this these big upside move. So I'm just kind of waiting. And again, we're essentially looking for this 1618, 43.78 as a potential upside target for next week, and possibly come up to 4,400 if it reached that level. Then on a pullback, I'm still looking for this thing to come back down to this 42.57 level and see would it be able to hold. If it doesn't, then this is the pivot high that I'm looking at, the 42.32.60, and that's the May 7 all-time closing high. And similarly to the NASDAQ 100, you can see the NASDAQ 100 has also came up to this 141 extension at 14,850 on Wednesday, but unable to close above it. It's still unable to close above it. So we're going to keep an eye on the NASDAQ to see would it be able to take out this all-time high that is put in on Wednesday, and see would it be able to close above this 14,850. If it is unable to do that, then I'd be watching for a pullback to this, again, back to this 100% here, this pivot high here, somewhere around 14,073. So that'd be my, scenario for the coming week. If it could close above this 14,850, then we're essentially looking at this psychological number of 15,000, then possibly move up to this 1618, and that would be the next potential target of 15,233. And for the Russell 2000, although it did have a strong day on Friday, but again, it's still unable to get back above this 2297 level here, this level that we are looking at. So right now, we still basically see what to be able to get back up above this level and try to come up and test this pivot high and possibly take out this pivot high here to make its way back up to the all-time closing high or the all-time high near the 2360 level. So if it is unable to get back above this 2297 and get rejected back down, then once again, we're still looking at this 2195. See, on Thursday, it came down, got a nice bounce off of that, this level here, 2195 level. So next time coming back down, would it be able to breach that and come down and test this level here, this pivot low, somewhere around 2130, and see what that holds. If it doesn't, then we're essentially looking at the Russell 2000 to pull back to the 2075 area. And here on the Dow Jones Transportation pulled back, got a nice scare on a lot of the people on Thursday. But looking on Friday, got an inside candle, a nice strong inside candle, and closed near the top of the high of the day. So right now we're still looking to see if the Dow Jones Transportation be able to reclaim the 15,000 level, if it could get back up above this trend line, because on Thursday it finally broke down from this price channel and closed below this trend line here. So essentially right now we're basically looking on the downside somewhere around this 14,242 area, and see would it be able to come down here and test for support. And if it could get back to the 15,000 level and back inside of this channel, then we still be looking at this pivot low level somewhere around 15,300 to see would it be able to hold support there. And for the Dow Jones Industrial, the Dow Jones Industrial also closed with a new closing high. Did not come up to put in a new intraday high, all-time high. The new intraday all-time high is at 35,091.56, and that was made on May the 10th. So right now it did close with a new closing high at 34,870.16. So we're going to see would it be able to come up and put in a new all-time high. And right now it seems like that it might try to come up and do that. So once again, we're basically waiting for the market message to see where the Dow Jones Industrial is going to go. Now, a lot of people was thinking that the Dow theory, like I said, I interpret the Dow theory in a little different perspective than the majority. And a lot of people was looking at the transportation making a lower low, and that implied that the Dow Jones Industrial is going to come down and also follow suit with the Dow Jones Transportation. Well, eventually that could happen, but right now we're basically not looking for that. Right now we're basically looking for a non-confirmation close on the Dow Jones Industrial. And right now we are seeing confirmation, and let me show you the reason why I say that. But before I do, let me just point out some of this, the target level that we'll be keeping an eye on for the coming week. On the upside, basically, is the all-time high at 35,091. Then on the downside, we're basically looking for it to come back down to this pivot low somewhere around 33,278 area, 33,300 somewhere, or the 33,000 if that doesn't hold. Now let's go and take a look at this multiple index chart that I have. So here we could see that the New York Stock Exchange Index, the last time we made a new high was up here, back here, and it did not make a new all-time closing high on Friday. Neither did the transportation. You see the transportation was back here in May. That was the last time we made a new closing high. But again, you're looking at the Dow Jones Industrial last Friday, the SP 500, the NASDAQ 100, and also the NASDAQ Composite. They all closed with a new closing high, but the Russell did not. The Russell is the lagger of all these index. The last time it made its high was way back here in March timeframe. So that is the lagger. Multiple indexes making new closing high. So there's this confirmation. Remember the video that I put out about the 7 key market indicator to watch. If you haven't seen that, go and check it out. The link is in the description below. And also you could find the link up here on this information icon. So go check that out and get a little bit more understanding of, well, what we should pay attention to on different things to monitor the market. And this right here does not show non-confirmation, and that's the reason why we could still see more new high from these indexes. So here you can see that the New York Stock Exchange Composite right here, it is trying to come up to this all-time closing high. It is still a little bit distant away, but depending on how the future rally in the near term will do, how broad that market participation will be. And if there is broad market participation similar to what has occurred on Friday, then I wouldn't be surprised to see the New York Stock Exchange Composite Index come up and test this all-time high and possibly put in a new all-time closing high. If it peter out and this is just a fake move, setting up for a more substantial pullback, then we could see the New York Stock Exchange Composite break below this trend line here. Then I'd be looking at this possibility of down here somewhere around 16,100 and eventually get down to this 15,775. But for now, it is still holding up here at this area here, trying to make its way back to the closing high. So we're going to keep an eye on this because, although on Thursday it did, dip down quite a bit, but it was able to rebound strongly and participated because of that broad-based market rally on Friday. And taking a look at the 10-year yield, you see on Thursday, the yield came down to a low of 1.268 and then rebounded nicely on Friday and closed at 1.356. So it's still comparatively low when we look at it from the a couple of weeks ago. So right now we're still kind of looking to see what the yield come back up above this 1.4. Or will it come down and test this area back at the 12 level, this 1.2% level. So that's important to keep an eye on this 10-year yield. And we are seeing the US dollar pulling back a little bit and coming back down to test this 92 level. Remember, we were talking about this this zone here, right? This 94 and 92 area. So if it able to stay above this 92, essentially stay inside this zone, then we basically are looking for the dollar to come up to this 94. But I suspect that when it gets close to this 93, the Fed is going to talk down the dollar because we don't want the dollar to be too strong. When it gets too strong, then our export will be too expensive. Then we just increase that trade imbalance. So we're going to keep an eye on the dollar to see, because the Fed is walking in a fine line right now. They could not let the rate go up too high or have the rate go down too low on the 10%, because then it will move the dollar up and down too much. If it goes too high, then our reopening and the recovery might be hampered by a too strong of a dollar. But if it's too weak and the rate is going down too low, then there could be some hidden problem that we might not know of or aware of yet. Okay, so we basically kind of keep an eye on this dollar to see would it be just hovering around this 92 or even come down to this 91 area here. But definitely keep an eye on this 93, 93 and a half, somewhere up here, because when it gets to that point, I would suspect we will have those Fed heads come out and start talking down the dollar. And here, looking at the crude oil, again, it's still hovering around that 95. It came up to this 75, and it came up to this 77 zone up here, this top of the zone, and pull back. But again, I wouldn't be surprised to see oil make it above the 77 and possibly trying to target this $80 level before we see a substantial pullback and come back down to this, this 60 level area here, the 68, 66 area. So kind of keep an eye on this, especially this 77 level, because I think there is still a little bit more upside movement on the crude oil before we see a little bit of a more substantial pullback from it. And for the silver, you see silver still hovering around this, this zone here, right? That 2470 to 2660. So right now it is, kind of try to get back above this 2667 area. See that it's kind of pulling back. You could look at this as a little bit of a flag, or you could also look at it this way. But doesn't matter how you want to look at it. I think we will see silver coming back down to this 2471, especially if the dollar rebound a little bit more on the upside. But again, silver have a little bit more of an industrial play as well. So if the economy is opening back up and things are, getting back to close to a little bit more normal, then we could see a little bit more higher demand for silver in the industrial application rather than just a precious metal hedge investment type of a play. But for gold, it's a little bit of a different story. Right? We're looking at this 1804 level. Right now, it is getting above this 1804. So this the next level that I'll be keeping an eye on is 1846 to see would it be able to get above that and then move back up to this 1923. But I'm still looking for this thing to possibly move back down toward this 1700. Then right now, yeah, if it come up and come back down and bounce around on this 1804, then I might be taking a little bit of a stab at the on a swing long to come back up to this 1846. But if it backtests and fail and I see a little bit of a hesitation, then I probably will take a look at potential short of gold and coming back down to this 1700 level and put a stop right above this 1804, above this 1804. So just, putting a, limited, very tight stop and try to play it down, at least making it back down to this pivot area here, this low somewhere around the 1740 area, 1740, 1750. Now let's take a look at SPY, the ETF for the S&P 500. I have two composite volume profile here. I accidentally used that to assist me in identify some potential support and resistance zone, or some might call it supply and demand zone. But whatever, we basically are looking for a price zone for potential price reaction. So right now, essentially, I got this big swing here on one of the composite. This composite is basically this swing up, from the June low all the way up to the present. And a lot of these low volume zone here is essentially being taken out by this upside move here from this low here, the June 8 low, and coming back up. So let's go and take a closer look at this area here on this swing here. Let me zoom this in. Now, this is a 60-minute chart, but it shouldn't matter that much when we look at volume profile, because we are plotting volume against price, not versus time. So time should not be a factor here to alter the general picture of the profile. So here we see that last Friday we got this move up, and we still got a little bit of some buying up here. Okay, although we sort of cut it off a little bit, but it's not that big of a, that sharp of a cutoff. But if you notice on the bottom here, we have a, a seller cutoff here. So that's why we're getting this nice bounce back, because we essentially have, the seller saying they are not willing to sell at this price. It's getting too low for them. So any potential buyer coming in basically have to raise the bid to find the willing seller. And here on the top here, we still see some willing buyer to pay this higher price. So we could still see a little bit more upside, possibly maybe come up close to this 436, before it come back down. But remember, we are looking at that 4378, right, on the S&P 500 161 extension. So that could push that, this S&P 500 ETF, the SPY, up to this 436 level. So we might see a little bit of a spike up to that 436 and then pull back, because you notice that there's a high volume node here, this point of control right near this 435.50. Okay, so, and that's where they pinned it on Friday, right? So coincident? No, not very likely. That was the plan. So right now we're basically looking at this thing possibly move back down here, okay, into this this zone here, right? This low volume zone, and that would be the 235 and what's that, 20, 235, 20, 235, 10. Yeah, 230, 235, 20. And then the other zone is basically down here at this 234. So we're probably looking at a little bit up move. And then if it come down, we're basically looking at this chop here. Come back down here to this 235.20, right? And then move down to 234.45. So watch the zone for potential price reaction, so see where we get a little chop and work itself down. And here's this big gap here down at this 232.40 area, and this 432, 40, and somewhere around 431.60. Okay, so keep an eye on this zone here. You see it come down and fill this zone. But once again, watch this, 436. We could see a little bit of a spike up and then come back down. That's basically what I'm watching for on the SPY. Although I don't trade the SPY, I trade the SPX. So, the option, if I play the S&P 500 or the ES, the futures. Now, looking at the QQQ, the ETF for the NASDAQ 100, you can see that we had a little bit more of a cutoff up here on the top here, right, at this peak here. And so right now, we're basically to see, would it be able to come back up here at this 362.76? And would it be able to get above it or get rejected as it come up and push back again down to this 355 area here, that we have a low volume zone here that could, provide some, price reaction there. And then down here is this composite value area high, somewhere around this 351.50 area here. Okay, so we're going to keep an eye on that on the downside, 355, and here on this 351.50. So those are the two levels on the downside, the zone that we'll be watching for the coming week. Then, of course, we got a little bit of a gap fill here. There's another zone down here at 349. Okay, so just keep an eye on these price zone here, kind of label the price level there. Didn't do that on the SPY. Maybe I post a chart with those price level on my Twitter stream. So if you're interested, go there and take a look at the chart there. I'll probably do that after I finish recording this video. So that is the Q. Now let's take a look at the ES, the E-mini S&P 500 future. Remember on the midweek, in the midweek video, I was talking about this poor high here on the market profile for the ES. And we're saying that this poor high has to get resolved and get tagged. And that implies that we're going to see another new high for the S&P 500. Now that was before that Thursday big drop, right? So on Friday it came up, and we indeed saw it took out this poor high and put in a new all-time high and also all-time closing high for the S&P 500. Now, if we take a closer look of the price action on Friday, there are some poor structure here, although it's not as bad as this day here back on the previous Friday, okay, before the 4th of July weekend. And we are looking at some single print over here, and there's one single print and some single print here. Although we did not see a poor high, so that's a nice cutoff in the auction here So next week, I think we will first be keeping an eye on getting these single print fill, then see would it be able to come down and take out the IP low or the low of the day, then basically work itself down to a lot of these untagged point of control and poor low. So eventually, if the market decides to give up the high, let's say get another push and then start coming back down again, and the bear is coming back out from their cave, then we could be watching these levels here to get tagged, and that would bring it down once again below the 4,300 and into the 4,200 level, into that 4,200 region here. Okay, so that's one thing to keep an eye on next week for the future, to see would it be able to come up and push, and how high would it be able to push up. 4,370, 4,380, we don't know. So right now we did see a nice cutoff on the auction, and looking at the volume profile, we can also see there was a nice cutoff here. Okay, and there's a little bit of a low volume zone, so we'll see, would it get a little bit of a reaction, and it is getting an extended long here, so we could see a little bit of a liquidation break and come down and fill this gap here from Friday and work back down into the Thursday value area and start tagging those naked point of control. Okay, so that's basically what we'll be watching out for in the coming week, is how much more upside would it be able to push before we see another, what I call a bear ray or bear attack, these quick hit and run. All right, so that's on the future. Now let's go take out one of the stock that I post on my Twitter. I don't have a position on it, but I just want to follow up on it, kind of give you some idea of some of the things that I'm looking at. Now, recently with the crypto, the Bitcoin sell-off and that sort of thing, kind of got a lot of people spooked. And here's a stock that just recently came public, right? Coinbase. Okay, and you see that they have tagged this this right here, this low here, okay, this low here, and see this. So it's like a little bit of a double bottom here. Okay, I have a lot of these price zones, and these are based on the composite volume profile to identify some of these potential price reaction zone. And right now, looking at the Coinbase, I wouldn't be surprised to see it come up, trying to get into this 275.65 area. Okay, but I wouldn't be chasing it right now. Basically, if I was to go in on a potential long, which I do not have a position on right now, is watch for it to pull back here to see where we get another reaction. Then look for a potential long setup and just have a stop right underneath it, right, to play it up to this 275. And wouldn't be surprised to see it work itself up back up to this 306 before we see a little bit of a pullback down to these levels here at the 275 and also 260. So that's just a little bit of a trade idea to kind of keep an eye on Coinbase. And if we do see a little bit more of a rebound from the crypto market, you might get a bit here. So that's it for this week. I hope you enjoy this video. As you can see from the advanced decline and also the up-down volume ratio, the Friday rally was a nice broad-based rally, but will this continue? That's what we need to keep an eye on for the coming week. And again, right now the market participants are still complacent and putting on risk. And that is always take that as a cautionary sign, because the market will punish the majority. Okay, so when we have most of the market participant is leaning on one side, the market will try to surprise them by going against them on the other side. So just bear that in mind. Thank you for watching. Be sure to smash that thumbs up to help me share and promote this video, and stay safe.